Charlie here, and in today's presentation I'm going to cover the price action candlestick patterns number 5, the piercing line and dark cloud cover. As always, we must start with a disclaimer. Feel free to pause the video and read through the entire disclaimer, but when trading any financial asset, there's a possibility you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose through this manner of trading. Trading involves a real risk of loss, and past performance does not ensure future results. So let's get started. What is the piercing line candlestick? The piercing line candlestick helps to identify major bullish reversals. The first candlestick of the piercing line pattern is bearish, and the second candlestick opens below the low of the first candlestick and closes above the midline of the first candlestick. The dark cloud cover candlestick helps to identify major bearish reversals, so this is the exact opposite of the piercing line candlestick. The first candlestick of the dark cloud cover pattern is bullish. The second candlestick opens above the high of the first candlestick and closes below the midline. With the piercing line candlestick, the first candle is bearish and the second candle is bullish. In this example, you see the first candlestick of this pattern is bearish, okay, and the second is bullish. The second candle opened below the first candlestick body here, kind of opened right about at it, but opened slightly below there, and it closed above the midpoint of the first candle body. So the midpoint, it would be right about here on this body, okay, and obviously it closed up here, so it closed above that. This is an indication that price may have a reversal in trend direction. So previously we had a downtrend, and now hopefully we're having an uptrend. Okay. One thing to keep in mind with these price action candlestick patterns and setups, I highly recommend using the daily time frame, or D1 on MetaTrader 4. That means each one of these candles is 1 day in duration. There's two reasons that I suggest this. One, just for easy, just so that you have time for yourself, so you're not sitting there staring at a chart all day. You come in one time a day and you look to see if your setups have occurred. Or you use an indicator such as the one here that just lets you know. It'll just email you at the end of the day and let you know if one of the candlestick patterns has occurred. Okay, so that is one reason. And secondly, it is much more accurate when you use a daily time frame. Okay, there's a lot of people out there that have said to me and even kind of dissed some of the things that I do, some of the lessons that I teach, because they say price action doesn't work. Anyone that tells you price action doesn't work doesn't know how to properly trade. Okay, at least not long-term trades. I can tell you that right now. Price action does work. Okay, some of the setups definitely have a higher win rate, and the main thing is if you're using proper risk management, you're going to be just fine. Okay, so a lot of those traders are using price action setups on a 5-minute time frame, 15-minute time frame, 1 hour time frame. That's not it. You're not really going to be very successful from that, okay? More than likely. You could luck out. But these setups are really meant for longer term trades, okay? And they're much more accurate when you're using a daily time frame. So, back to the lesson. Sorry for my little rant there. It's very important to know that and to use that when you're trading price action. So, with the dark cloud cover candlestick, the first candle is bullish, and the second is bearish. Okay, the second candle opens above, which is right here, above the high of the first candle body, and it closed below the midpoint. So the midpoint would have been right about here, so it closed slightly below that. And this is an indication that price may have a reversal in the trend. Okay, so going from an uptrend to a downtrend. So how do we trade these? Okay, with the piercing line candlestick, it's traded after the full formation of the second candle on the daily time frame. Okay, so right here we have a setup. First candle is bearish, second is bullish. Opened below the candle body, and it closed above the midpoint. Okay, we would wait for the full formation of this second candlestick. Okay, so you wait till the end of the day, and then you would enter a long position at that point. The stop loss, or SL, is slightly below the low of the first candle. Okay, so here's the first candle, here's the low, here's our stop loss below that. There's no set number of pips. People have asked me this before. It would just be previous support. Okay, so keep that in mind. If you don't know much about support resistance, please check out some of our lessons. I'll be coming out with some new ones simply because support resistance is so important. It doesn't matter what you call it. If you call it support resistance, if you call it zones, if you call it magnet levels, there's all different names for them. It's where price consolidates, hits, breaks. Okay, so it's just these levels. Okay, you can look back on any chart, and you can usually easily define support and resistance. Okay, so like I said, I'll come out with some new lessons on that just because of how important that it is. Our take profit levels are set at major resistance levels. Okay, so you can't really see previous on this chart, but that's where I set these three green lines, which would be your three take profit levels. All three obviously hit, and if you had a trail stop set in place, then you would have gained a little more from it even. Price never came near our stop loss in this example. The dark cloud cover candlestick is traded after the full formation of the second candle on the daily time frame, same as the piercing line. So here's our bullish first candle, here is our bearish second candle. It opened above the first candle body, and it closed below the midpoint. Okay, we would enter slightly below here. We would set our stop loss slightly above the high of the first candle, which the high is right here. Here's our stop loss. Price obviously didn't come back before it hit some take profit levels. Now in this example, it only hit 2, and then reversed back up. So I highly recommend having a break even for your positions, or keep a close eye on those. Keep a trail stop maybe going. But once a trade starts going against you, which this occurred, let's see, 1, 2, 3, 4, 5 days. It hit the first 2 take profit levels. 6, 7, 8, and 9 is where we break back above previous resistance. Okay, so if you were manually exiting, you would manually exit here. Okay, if you had a break-even set in place, then you would have been hit. You would have taken out here. Okay, so just some different things to keep in mind. Everyone's different with their style of trading. Okay, here's a few examples. This is a piercing line example. Okay. The first candle is bearish and the second is bullish. The second opened below the low of the first candle body, and it closed above the midpoint. And we would enter here, set our stop loss down here, which is at previous support, okay, and it's below the low of the first candle, okay. Our take profit levels will be set at previous resistance, okay. And as you can see, price did hit all three. If you had a trail stop, you would have gained a little more from it. If not, you just would have been out of the trade and would have gained some nice profit. Here's another example of the piercing line candlestick. First candle is bearish, second candle is bullish. Second candle closed above the midline of the first candle body. Our stop loss will be set below the low of the first candle, or previous support, and our take profits would be set at previous resistance levels. In this example, the stop loss was not hit, and all three take profits would have been hit. If you had a trailing stop, you could have gained more. If not, you still would have gained a nice profit. Here's an example of the dark cloud cover candlestick. In this example, it hits the first two take profit levels. Our first candle is bullish. Our second candle is bearish. The second candle opened above the high of the body of the first candle, and it closed below the midline. It's kind of right at it, but if you need something to help determine that, there are indicators out there for that, such as this one being displayed here. It'll show a DCC for dark cloud cover, and it'll show a PL for piercing line setup. Okay. So we would enter right after that full formation, and our stop loss would be slightly above the high of the first candle, or at previous resistance, and then our take profits were set at previous support. First two take profits were hit, and if you had a break-even set, you would have been exited out. If not, hopefully you would catch where price did come back up and break previous resistance, okay, because at that point, we've broken the pattern, and there's no point in staying in. Just take the loss at that point if you didn't have a break-even set. So that's it. In my next lesson, I'm going to cover the hammer hanging man candlesticks. So you guys have a good one,